Thinking about investing in real estate, but not sure what to watch out for. Today, I'm breaking down super practical things you need to know before you buy your first property without confusing jargon. Let's keep it simple. Let's keep it real. Let's get you ready to invest with confidence. Hi friends, I'm Mandy. I'm a licensed appraiser, scrivener, and a broker here in Taiwan. I work with commercial and industrial properties, doing everything from valuations to title transfers and brokerage. Legal and financial stuff? Yup, that's part of the job too. This channel is all about for sharing tips and insights on property investment. If you are into real estate or just curious, hit that subscribe button and give this video a like, so you don't miss any videos where I share tips, know-how, and real talk about property investment. You might be dreaming about investing in office buildings, commercial complexes, or industrial sites. But honestly, when you're just starting out, it's smarter to begin with the basics, like residential properties. Buying residential properties is usually easier for most of you than purchasing shopping malls, industrial sites, or commercial complexes. The due diligence for those property types tends to be much more complicated than it is for residential. A lot of skills and the know-how you pick up there will carry over to the bigger, more complex property later on. That said, the core idea behind investing in residential properties is very similar to investing in the other types of properties. So, in today's video, let's use a straightforward example: residential properties that are typically held for the medium to the long term. Alright, let's get into it. Location, location, location. Yeah, you've heard it a million times, but it's true. A tiny place in a great area can be better than a big place in a dead spot. Besides the location you are familiar with, how do you know it's a good place for you? Here, I'm walking you through the location factors from different angles. This part is super important and really fundamental for your final decision. So, hang in there with me. This part is worth listening. Okay, let's start from a tiny spot, then zoom out to the big picture. Let's assume you found a property that caught your eyes. The very first step is to do site inspection. A site inspection isn't just about looking at the building itself. You are also checking out the neighborhood. Things like convenience, safety, what's nearby, the overall vibe of the surroundings. Of course, the actual condition of the property. Don't get fooled by the pretty paint job. Check plumbing, electrical, roof, and structure. Do you need to renovate or remodel it? What it is cost? Get an inspection so you don't end up with the money pit. Basically, you need to see not just the house itself, but the whole picture around it. When investing in real estate, a reliable investment always starts with a thorough market survey. Don't skip this, or you will get surprises you don't want. When we talk about whether leasing makes sense, we are looking at things like where the tenants come from, how much rent you can charge, what it cost to run, how often the place might sit empty, and what the popular sites layout are in the area. For instance, students are primary tenants for the properties located nearby colleges or universities. The popular choice tends to be 1 LDK or 2 LDK, which generally command higher rents compared to shared houses and apartments. Or your potential tenants might come from international companies, which have set up branch offices in the local market. Of course, you can expand the market survey to cover not only the points above, but the factors such as job opportunities, population trends, or household income levels. When you are checking out an area, don't just stop at rent and costs. That's only service. Think bigger. What is happening around here? Are new coffee shops popping? Is there a new MRT station on the way? Or maybe a school or shopping mall being built? Those are the signs neighborhoods on the rise. So good to check if there are any less ideal facilities nearby. Things like a funeral home, crematorium, landfill, or high-voltage towers. Things like that can sometimes have an impact on property value. Some of the investors buy big-size residential or retails, dividing it into several units to lease out, because market survey tells them small-size units are popular. When you got information about this, please be careful about the legality issue. In some countries, you need to get a license for renovation or modification, which is approved by local government. Or let's say you buy a 2-story townhouse and wanna run a grocery store on the first floor while living on the second floor. Is that allowed? Do you need to get permission from local government to do that? Legality is always one of the key factors you need to watch out for before investing in real estate. You never wanna take big risks on it. You hold on to a fluke, you lose everything. Here is a big one, government policy. Always keep an eye on what the government's up to, because it can totally shake up the real estate market. Government policy is a huge topic. I will talk of some of them. Think about this. When they change loan percentage, suddenly buyers can borrow more or less. When interest rates go up, monthly payments get heavier. And a new tax rule, it can totally eat up profit fast. Above all, are highly possible to change your financial analysis. So, yeah, government moves might sound boring, but trust me, they can make or break your investment. Here is something a lot of investors overlook. Good management can boost the property's value. Sure, that's changing your financial model. Outsourcing usually costs more than managing it yourself, but trust me, it can protect your return in the long run. If you are a solo investor with just one property, like an apartment or small office, managing it yourself might be simple enough, but even then, you still need pros to handle things like maintenance or repairs. It's way better than trying to fix everything on your own. If the property located outside of the area where you live or work, like you wanna buy a house in Tokyo, but you live in California, You certainly need property management companies to serve you. You don't want to take flight from west to east just because of leaking or water pipe repair problems, or when a tenant fails to pay rent on time or there are disagreements. You don't need to handle them on your own. It's a good idea to outsource the task to the professionals who can assist you. If you cannot find a local expert, that would be a big problem. And here's an important part. If you ever want to sell later, how easy would it be for someone else to jump in the secondary market? That's what really tells you whether the investment has a long-term value. Always keep this in mind. Liquidity is one of the key factors in any investment. Compared to stocks and other assets, real estate is much less liquid. It takes longer to sell. That's why you should think about the resale market right from the start. For example, if you sell a stock worth $1,000, investors can snap it up in seconds. No big deal. But if you sell a property worth of $1,000, that's a huge commitment for most of the people. Buyers need time, sometimes 2 or 3 months, to make that decision. And here is the catch. The longer it takes to sell, the more risks you will be carrying. That's why liquidity really matters, because it's tied directly to how long you will be holding the property. Real estate isn't just like stocks. You cannot cash out overnight. That's where liquidity risks kicks in. So a well-thought-out exit plan balances your need for liquidity with your return goals. If you know you might need cash fast, you'd structure a more liquid exit strategy, like a short-term holds or properties in highly tradable market. When you have control over the factors like market survey, management, government policy, legality, or exit plan, you have integrated them into your financial spreadsheet. Let's talk about how important financial analysis is. When making a purchase decision, we want to compare apples to apples, not apples to origins. Financial analysis is for this. Financial analysis is a common and popular used language and tool among investors in the world. By it, investors can compare return on investment among several properties, knowing risks and making decisions. For example, there are 3 properties located in Taipei, Taichung, and Kaohsiung, which have different costs and rents. Which one should I buy? Or there are 3 properties type, house, apartment, or small office. Which one is the right choice and better for me? You can get the answer by financial analysis. Financial risk management is crucial. This means understand your risk tolerance, ensuring the property generates enough cash flow to cover expenses, not over-leveraging with debt, which might become unmanageable, especially if the property loses tenants or market conditions worsen. Beware of emotional decision-making and rely on clear and analytical approaches. Avoid overpaying or investing based solely on expected appreciation. Instead, focus on strong rental potential and cash flow. What I talk about are relevant to the 3 points. By using financial analysis to know your budget and the hidden costs. It's not a price tag. You've got taxes, insurance, maintenance, repairs, and sometimes management fees. Make sure you've got a cushion so you are not stressed out every month. Number 2, by using financial analysis to know your goal. Ask yourself, Do you want monthly rental income, or are you banking on property value going up over time? Ideally, both are nice, but know your main goal before buying. Number 3, by using financial analysis to know your return, which property should you invest in? After analyzing projects, earning $10,000 in project 1, $15,000 in project 2, which one should you buy? When conducting financial analysis, your decision should rely on investment performance metrics, not just how much money you might make. Investment performance metrics include cap rate, ROI, IRR, COC, and DSCR, etc. I might talk some of them in the future, depending on my time. I wrap up this video. 7 things you should know before buying real estate include site inspection, market survey, legality, government policy, management, exit plan, and financial analysis. Key things are comprised of location quality, thorough research, financial and risk management, legal and tax factors, and attention to the detail for investment process. These things help you mitigate the risk and enhance the potential for a profitable real estate investment. Alright, this is all about things you need to know before buying real estate. Don't forget to subscribe to my channel and give this video a thumbs up. You won't miss out on any videos where I share tips, know-how, and real talk about real estate investment. See you in the next video.